Good morning traders, and welcome to this Orbex Market Insights video on Monday, October 28th for the equities indices, looking at the SPX500 and the UK100. So as usual, we will digest the fundamentals first before moving on to look at some technicals. So in terms of the fundamentals driving the SPX500 at the moment, the main topic is that of Fed rate cut expectations. In line with a slew of weak data recently, the market is now expecting that the Fed will cut rates when it meets this week and is looking for another 0.25% rate cut. Although voting was split more than usual at the September meeting, the deterioration in conditions since then has seen the market adjusting its view. Such a move would be bullish for equities, providing further liquidity for the business environment. So looking at the backdrop then for the UK100, and obviously the main driver at this stage is still Brexit. The UK is currently still scheduled to leave the EU on October 31st. However, following Johnson's failure to gain approval for passing his deal by that date, the UK has now requested an extension to Brexit. The EU has agreed to a delay, though has not yet said what the new deadline will be. In the short term, UK assets have been supported given that a hard Brexit now looks likely to be avoided, with the potential that Brexit could be postponed until the end of January 2020. Okay, let's move on and take a look at some technicals now then, and please remember that opinions discussed here do not constitute investment advice, and when trading, losses can exceed profits. So, starting off with the SPX500 on the daily chart then, and if we start with quite a zoomed out view, you can see that over the last 6 months or so, price has been moving in this ascending triangle pattern, putting pressure on the 30.23 to 30.38 resistance zone. Now, dips down to the supporting trend line have been well bid, keeping pressure on further upside. And I am anticipating, as per the podcast that I did with Stavros on Friday, that we will see equities break out to new highs. However, it is as a point of risk here, you can see that the RSI indicator is flagging up bearish divergence, so traders should be aware of any downside reversal patterns. If we drop down onto the H4 chart then, and again, you can see that price is currently testing that 30.20, 23 to 30.28, 38 resistance zone. And if you look at this last move up on the 4-hour chart, you can see again the RSI indicator is flagging bearish divergence. So it is worth pointing out there that there are potential downside risks, and traders should be aware if we start to see any bearish reversal patterns, as that could see a pop to the downside. But again, any move down is likely to find support as we test the bullish trend line. Moving over then to the UK100, and you can see here that the UK100 chart is currently testing the bearish trend line from 2019 highs. Now, price action is also forming. You can see a large head and shoulders pattern here. We've got the left shoulder, the head, and the right shoulder with the neckline at the 7039.2 level. So if we do see a break below that 7039.2 level, this could pave the way for a much larger reversal lower in the UK100 with an initial support down at the 6770.4 level. Dropping down onto the H4 charts then, and you can see interestingly that this recent pop higher into the test of that trend line hasn't registered any bearish divergence on the RSI yet. So for now, indication is that we shall continue to move higher, and this is true while we stay above that 7258.1 support formed at that last high in mid-October. If we break back below that level, however, then focus shifts back to a test of the 7039.2 region. Okay, thanks a lot for joining me today. I hope you found that useful. Remember that we do have plenty of event risk over the week with the FOMC, the Bank of Japan rate meeting, and also the Bank of Canada. And then we have the NFPs at the end of the week. So there's plenty of event risk which could offer significant volatility in the markets. So please make sure to stay tuned into the blog each day, where we will update you on all relevant and important trading updates, doing our best as always to serve traders responsibly. In the meantime, good luck with your trading, and I wish you all a good week. Thanks for joining me. Goodbye.